Hi everyone, welcome to the session. In this session, I'll be discussing about one of my viewers' request. This is regarding control accounts and reconciliation. So I have picked one question in this regard. So let's see how we can solve this question. The following balances are provided as on 31st December 2020 for AG PLC. The sales ledger control account. Sales ledger control account balance is 32,748 debit. It's a debit balance, and 3,000 credit balance. Okay, so there are two balances given. One is debit and the other one is credit balance. While the listing of individual customer account balances net is 28,956. So you are given the individual customer account balance. Okay, so where do you find the individual customer balances? So that will be in the subsidiary ledger. So in this case, you are given the sales ledger control account. So that will be in sales ledger. Okay, so you will find individual account balances of customers in the sales ledger. So you are given the total of individual customer balances as 28,956. So as you can see, this total, how much is that? 32,748. 32,748 minus 3,000, which is 29,748. Okay, so these two balances are not matching. Okay, so therefore you are given the reasons for the differences. So based on this, we need to find out the closing balances, the matching balances between the control account and the customer account balances. So investigations have revealed the followings. Okay, so what is the first one? Sales invoice for rupees 2,570 had been posted to the customer account as 2,750. Okay, the sales invoice value was 2,570. So this had been posted to the customer's account as 2,750. So here the mistake is in individual customer account balance. Okay, so not in the control account, because control accounts are updated based on sales day book. Okay, so based on the sales day book total, the sales ledger control account will be updated. Okay, so that has been posted correctly, but individual account balance is overstated. This is overstated. By how much? This was overstated by 180 rupees. Okay, this was overstated by 180 rupees. To correct, you need to deduct it from the individual customer account balance. Okay, so since this balance was overstated, okay, to rectify this, you need to deduct this amount from this individual account balances. Okay, so let's go to the let's see what is required. Required is to make the necessary posting to the sales ledger control account and calculate the correct balances for inclusions in the client's annual account, and also reconcile the listing of individual customer account balances to the updated balance on sales ledger control account. Okay, so these two balances should match. Now let's take the opening balances of sales ledger control account. 32,748. It's a debit balance. 32,748. This is the balance brought forward. Okay. And also we had balance brought forward, credit balance 3,000. Okay. So, and also we need the reconciliation. The reconciliation balance, the opening balance of individual customers, 28,956. Okay, so 28,956. Now the first entry, as I explained you, since this was overstated, since the customer account balance was overstated, okay, so you need to deduct it from the total customer balances. So therefore you can say overstated amount, it has to be updated here. Overstated balance 180. So this has to be deducted. Okay, so let's move on to the second difference. One of the customers is also a supplier. During the year, it had been agreed that balance to the value of 750 should be set off against each other. The relevant personal accounts had been updated, but no other action had been taken. Okay, so which means the individual customer account balances are updated. Okay, but the control account balances are not updated. So when you set off customer balance against supplier, so the relevant entry should be the supplier control account should be debited and customer account balance should be credited. Okay, so you need to creditor should be debit, the debtor should be credit. So this is the set off entry. Okay, so what should be the entry now? Since we are asked to update the sales ledger control account, we need to update the sales ledger control account, not the creditors control account. So therefore, what should be the entry? This 750 should be set off against the creditors. So therefore, you need to credit the sales ledger control account. So therefore, let's move on to the sales ledger control account. Let's say set off against creditors, okay, 750. So we need to credit. So this is the debit side and this is the credit side. Okay, so let's move on to the third one. According to the cash book, discounts allowed to customers total 328 rupees. These amounts had been correctly posted to the personal accounts, but the total had not been posted from the cash book to the nominal ledger. So what has happened? So this means to the sales ledger control account. Okay, so when you receive money from customers, you have to credit their account. And if discounts are allowed, so what we have to do? We need to credit the customer account too. Okay, so we need to credit the customer account as well. So therefore, the correct entry should be, okay, so we need to debit the discount allowed account and we should credit the customer's account. Okay, so customer account should be credited and discount allowed account should be debited. So therefore, we can say discount allowed 328. Okay, so 328 has to be credited. So fourth entry, the total value of invoices in the sales day book had been incorrectly calculated on 2 occasions. In one case, the total was underestimated by 53 rupees, and on the other occasion, the total had been overstated by 29. Okay, so as I told you earlier, the control accounts are updated from day books. Okay, so when there is a casting error in the day book, that will have an impact on the control accounts. So in this case, 53 rupees was understated, which means control account balance is less. So therefore, to rectify, we need to add back this 53. And on the other hand, this 29 was overstated. So therefore, what we have to do, we need to the credit the control account. Okay, so we need to credit the control account by 29 and we need to debit the control account by 53. So 53 is the underestimated. This is underestimated 53 rupees, and this is overstated by how much? 29. So this is how you rectify. Then fifth one, 350 receipt from Samsung PLC had been posted to the personal account of Simon PLC. So what has happened? There is an error. So this is an error, but it will not affect, this will not affect the balancing of control account and individual customer account balances. So therefore, no entry is required. Okay, no entry is required. Sixth, the credit side of the subsidiary account. Okay, the credit side of the subsidiary account of Peter is a debtor has been undercast by 70. Okay, so this debtor has had a credit balance. That credit balance was understated by 70. So what does this mean? This means when taking the total of the customer balance of Peter, it was undercast by 70. This was undercast by 70. So the credit balance is less because he had a credit balance. When you take the balance, it was undercast. So therefore, the credit balance is less. To increase the credit balance, you need to credit 70. Okay, so which means you need to deduct from the total customer debit balances. Okay, so basically the customer balance is a debit balance. Okay, so since this is a credit balance, what you need to do? You need to deduct this from here. Okay, so what is the reason? It was undercast 70. So you need to deduct this balance. Question number, then the point number 7. Basil's account had been credited with 34 for goods returned by him. Okay, so the Basil is a customer. he had been credited with 34 for goods returned by him, but no other entry had been made in the books. So which means what has happened? The control account was not updated. Individual customer balance is updated. So to rectify, what we need to do? We need to credit the sales ledger control account by 34. So therefore, we'll go to the credit sales ledger control account and we can say goods return. This has to be credited by 34. Okay. Then we'll move on to the question 8. A discount of 1,200 allowed to silver had been correctly recorded and posted in the books. This was subsequently disallowed. Subsequently disallowed. So the discount of 1,200 was allowed to silver. So when you allow discount, you credit the customer account balances. Okay. So however, it was disallowed subsequently. So in this case, we need to restate the customer balances. Okay. We need to restate the customer balances. Okay. So how do you do that? We need to debit the control account, and also it has to be updated in the individual customer account balances, which means you need to add back the individual customer balances. Okay. So therefore, let's move on to the sales ledger control account. So we need to debit 1,200. Okay. Discount allowed. And also here 1,200, we need to add back discount allowed. Okay, so we'll move on to the other one. Point number 9. One of the credit balances in subsidiary book of debtor 20 has been listed as it is a debit balance. Okay, so what has happened here? When you make an error by reversing the original entry, okay, so you have reversed the original entry. Why is that? Because a debtor 20 has been listed, the credit balance of the debtor has been listed as a debit balance. This is a reversal of the original entry. To rectify, we need to reverse the impact twice. Okay, so therefore, in this case, we need to credit the individual customer balance by 40. Okay, so the error is in the subsidiary ledger, which means the sales ledger, individual customer balance. So therefore, this 40 has to be, since it's a credit balance, okay, the 40 has to be deducted. Okay, so when you credit, okay, so why we are deducting? So usually this is a debit balance. Okay, so this is a credit balance. So therefore, net impact has to be minus. So therefore, we can say wrong posting 40. Next one. One of the credit balances in the subsidiary books of debtor 15 rupees had been listed twice, once as a debit balance and the second as a credit balance. Okay, so here what has happened? Since the same amount has been debited and credited, Okay, the impact is 0. However, we need to record the correct amount. So what is the correct amount? What should be the correct amount? You should credit 15 to the credit balance of the debtor. So therefore, we need to credit individual customer account balance, which means we need to credit means we need to deduct this 15 from the total customer debit balances. So individual customer balance should be credited, so which means the impact is minus. Okay, so we can say listed twice. This is the error. Okay, next one of the receivable balance of 9 rupees in subsidiary books of debtors has been wrongly put as a credit balance in the subsidiary books of creditors. So, which means basically the individual account balance of customer is omitted from the books. So we need to record this particular transaction. Therefore, we need to debit or we need to add to the individual customer balance. Okay, so amount omitted, okay, 9 rupees has to be debited. Debited means the impact is plus. Next entry, a rupees 3,000 credit balance includes 1,000 from a customer received during previous period in excess of his debit balance. Okay, now we are given an opening balance here, which was a credit balance, right? This credit balance 3,000 includes 1,000 from a customer received during previous period in excess of its debit balance. Okay, so in excess of debit balance he paid. So therefore subsequently the 70% of this amount has been refunded during the year, but no entries have been made in the books. So which means the control account and the individual account balances are not updated. Okay, so to rectify this, what we had to do, we need to debit the control account and we need to add back the individual customer balances. So 70% of 1,000 means how much? 700. Okay, so we need to debit 700, amount refunded. Okay, and we need to add 700, amount refunded. Okay, and the last one is sales invoice of 440 has been entered in the books as purchase invoices. So basically the 440 has not been recorded, it has been omitted completely. Okay, so to rectify this balance, we need to debit the control account and we need to add back to the individual account balances. Okay, the 440 has to be accounted here. It was omitted, sales omission. Okay, and 440 has to be added back here, sales omission. Okay, So those are the errors that he has made. So we have now rectified this. Now we have been asked to prepare the sales ledger control account, and also we need to reconcile the balances. Now we have to take the closing balances. So what is the closing balance? We need to identify the closing balance. So here, the closing balance, this 3,000, they are also credit balance. Okay. So therefore, balance carried forward. This 3,000, okay, we made an adjustment, which was this 700. Okay. So 700 was refunded, right? So this 700 has to be removed from here. The balance will be 2,300. So once you balance this, you can see the closing balance of sales ledger control account. When you total of this debit side, that will be 37,441, 37,441, and the correct balance will be, so that will be 37,441 minus 3,000 minus 750 minus 328 minus 29 minus 34. So that will be 33,300. Okay. So now the closing balance, so when you take the balance brought forward, balance is 33,300. The credit balance will be 2,300. So what is the net? Debit minus credit. 33,300 minus 2,300. 31,000. So this balance should match with your individual balances. Okay. So once you take the total, 28,956 plus, minus 180 minus 70 plus 1,200 minus 40 minus 15 plus 9 plus 700 plus 440. How much? 31,000. Okay. So which means the individual account balance is matching with the control account balance of 31,000. Okay. So as you can see, after rectification, the balances are matching each other. Okay. So that's all for now, and thanks for watching, and see you soon with another video.